I'll start the recording up. Alright, good afternoon everyone. Today is Thursday, November 29th, 2012. The results for today, let me get over those first. Crude oil were plus 1 tick, gold were plus 11 ticks, Russell were plus 5 ticks, and soybeans were plus 8 ticks. Okay, now I'll go through all those markets individually here in a few minutes. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. All we ask for is your name and your email address. No credit card information required. We'll send you an email that's got a link to download all the stuff you see here, the indicators, the charting platform, everything. It'll also send you a link to get into our live trading room for 5 business days, and you can watch us. You can watch us trade and hopefully learn everything that we want you to, or at least pick up some of the stuff anyway in the first 5 days, to understand that you can do this, that you can make a profit with this, and that the opportunity is before you every day. Again, that's www.cfrn.net/apply. If you are on a free trial with us, we have a partners meeting tonight. You must be a partner to get into it. You should have information in your email with the instructions or the paperwork you need to fill out to become a partner. Okay, if you want to become a partner and get into the partners meeting tonight, that would be great. Just take care of it. If you do not have that email, just send us an email at support@cfrn.net. That's support@cfrn.net, and we'll get the information out to you right away. Okay, plenty of time to become a partner before the meeting tonight. If you are a partner, reminder, meeting tonight. Okay, all right. That said, let me just jump right into this because we traded a lot of markets today. The ES was one market we didn't trade, but I'll run through the 4-tick range on the ES because there were a couple of opportunities today where I wanted to point things out. We had bullish divergence here. We had a bullish cross with bullish divergence. You see this is a 4-tick range on the ES. Bullish divergence, bullish cross, tested the BBC, up close. You could have gotten long right there, taken a couple of, a point and a half, I think, 0.75 is what came out of that. There was another opportunity right here when it pulled back down. This time we went through the BBC. We still had bullish divergence, but the cycle was red and headed down a little bit. The close up above this trend line that I drew on here was an opportunity to get long. That one did go a couple of points, actually a few points. The next one over here, you didn't get the close above the trend line, so you start thinking short. All right, I apparently didn't draw any trend lines on this move down. It got choppy in here, and I was not looking at it right there. But right over here, I did draw a trend line down. We had an up close right here. If you got into this trade, 14.12 is where your stop would have been, right here. So you would have drawn down almost to your stop and then made your profit target. Okay. We had this big move right here. I wasn't part of that. And then this happened during the break. All right. Actually, all this happened during the break. So that was the ES on the 4-tick range this morning. Okay. Let's see. I'm gonna minimize that. We looked at the 10,000 contract a little bit this morning, but it was back and forth around the weekly trading zone and all that. We didn't take any trades off of it. We just looked at it. Okay. The NQ, I pointed out some trades on the NQ. I didn't actually take the trades myself because I didn't have an NQ DOM up. But let's scroll back here to where the day started off. I pointed out these trades. Where you see the black lines on here, those are trades that I pointed out while they were happening. Okay, but obviously I missed a bunch. Right here was one. Close above that trend line right there with the bullish divergence. It didn't hit the BBC, so you didn't get to take the trade off the BBC, but you did get a close above that trend line, so you could have gotten into that big move right there on the way up. All right. You could have gotten into one right here that would have stopped you out as well. All right. Not every trade is a winner. You would have gone long right there and stopped out right there. Just looking over here to see if we had any other opportunities. We didn't right there. We did right over here. Right here. Now this was all in the first half an hour. All right. Right there is the trend line. We had some bearish divergence, but the cycle was headed up in this case, so you wouldn't want to go on the down close at the BBC. You would want to get down below that trend line, which we got right there. In this case here, the black line was above the BBC with the MA1 below it, so you probably wanted to skip that anyway. It did go down to the swing pivot, but not a trade that you should take anyway. Over here, little move up to the swing pivot. Over here, big move down, another big move down, and you could have shorted again. I don't know what this line here is from, but you could have shorted it again right here on this down close, and if you missed that one, you could have done it again right over here on this down close. All right, that was all in the first hour. You know, we were looking at the same things over and over and over again here on the NQ and all the other markets for that matter. Now, I didn't take any trades on the NQ, so I'm not going to spend too much more time with the NQ. Okay, let me jump over here to gold, because we did take some trades on gold. Well, we took at least one trade on gold. I have to go and see where I drew it in. Yeah, okay, we took that one trade right there on gold. Oh, two trades on gold. Okay. It's all the same stuff, though. You see, we have a very good feeling for the flow of the market here with the way that everything is going. Our indicators, you get your bullish cross telling you're going to be looking for long trades. You're waiting for the pullback down to the BBC. You get it right here. You could go long on two different ways right here. You could go long on the up close off the BBC right there, or you could go long on the close above that trend line right there. Either way, they both moved up, perfectly. The same thing's happening over and over and over again. Let me go over here. Let me go over here and I'll show this. And Robin, I see your question in there, so I'll answer that in a minute. I'll read it out loud and then I'll answer it, okay? Right here, you had your bearish cross. You pull back up, test to the BBC. Now, you had just a tiny bit of bearish divergence here, so you could have taken the down close, but if you weren't comfortable with that because there wasn't very much divergence, you could have waited for the down close below the trend line, which is what I did. I got short in there and I took some profit over here. All right. It did it again right over here, the same thing, but again, the black line got up above the green, so the green was in the middle, not the best scenario. Right in here was an opportunity. It pulled back up, tested the BBC. Again, just a tiny, tiny bit of divergence, so if you wanted to wait for the close down below that trend line that I drew on there, that worked out just fine. On the other side, once the MA1 crossed the BBC, you're looking for long trades now, no longer looking for short trades. Pulls back right here. It didn't hit the BBC, though you did have bullish divergence. You couldn't take the trade right there, but you could take it right here. Okay, same thing again right over here. This was the last trade that I took. This one actually put me up 17 ticks at one point, and it moves so fast. The move, you can see right here between 11:04 and 11:05. There's all this space, all these bars right here. It moved really fast. I got long right here, and it took forever for the thing to move up, and then all of a sudden it just caught a bid, and it flew up there, and I was plus 17 ticks, and I was moving my stop up, and it came back out, and it got me out right here as I was moving my stop. But anyway, I made profit on the trade. We ended up plus 11 ticks on the gold. All right. There were more things. Big plunge in what? In gold, John? Okay. And that was all the trading that I had done. But we have a request to show the big plunge in gold this morning. And I'm guessing it was a big plunge pre-market. That's yesterday. That's last night. That's the move up. This plunge right in here. You mean? Okay. I'll go with that. Right here you're looking for the bearish cross down below the BBC. Okay. You get that bearish cross. You're then looking for bearish divergence, which we have right here. So there's a couple of ways you can trade this. One was on the close down below. That was a bad trend line. One is on a close down below that trend line. You could have gotten short right in here. Another is the down close off the BBC with the bearish divergence down here. Okay, so you could have gotten short there. You could have gotten short again right there. If you didn't like that and you wanted to wait for confirmation, the confirmation was right here. The next level was over here. The next one after that would have been right in here. Right in there. That would have stopped you out, probably. Okay. Your next opportunity after that would have been, if you didn't move your stop up after making 6 or 8 ticks on it, you would have stopped out. All right. Your next opportunity would have been this one right here. I'm sure it was a very fast market. It looks like it was very fast. If you look at the space, the number of bars between the minutes down here, that will show you how fast the market is. So if you shorted right here, you probably would have been down here and back up to here before you were able to take anything right in here. Okay, so if you shorted right over here with 8 ticks risk, then you probably would have been here before you knew it. But that's it. That's the nature of the beast, though. The beauty of it all is that you can see these trend lines. As soon as you get 2 bars, you can draw a trend line. Okay, as soon as you have 2 bars, you can draw a trend line. Let's see. Okay, I was just reading through the questions. Now we get into the break period right here, but I didn't trade any of this. But this is how you would trade it. Okay. Right here, you just follow the trend line up to the BBC. Once it gets to the BBC, you're expecting it to turn around. All right. We did have some good bearish divergence down here, so when you have a pullback to the BBC and you have bearish divergence, you're expecting this green line to work its way down into the cycle. All right. That should give you an idea of the range of the trade. Okay. In this particular case, you would have had to have waited for this close right here, gotten short right there. There was no drawdown at all. It went right down to here before it even pulled back a little bit, and then it went all the way down here. You could have continued the trade right there, right here on the close of this bar. You could have continued it on the close of that bar. Now, the reason I'm saying you could continue it here is because it was pulling back to the BBC, but it didn't actually hit the BBC. There was so much momentum in the market that it just pushed it down through. All right. That's, if you take all the things off of here, then you won't see that. You won't see that it's pulling back to the BBC. You won't see that the MA1 is below the BBC, so you should be looking on the short side. Or the MA1's crossed above, so you should be looking on the long side. You won't see the divergence down here without the indicators. Okay? I know this chart's not quite as clean as that one that Dwayne had up there where we just had the MA1 on there. Whoever that was that had Jerry MA. It's not as clean as the one that where Dwayne just had his MA1 on there, but it's not too far off it. There's only 1, 2, 3, 4 indicators on here. It's all pretty straightforward. Now, if we had the question, that there was a question that came in or a statement that came in, if we had to give 3 strategies, 3 CFRN strategies to trade, what would they be? And it goes on to say what has the highest percent gains and all that sort of thing. I can't give the highest percent gains thing because I don't trade every single trade, so I don't know, and I haven't gone back to look at every single trade. That would just be a humongous task, and I just haven't done that. But I do know that on pretty much any given day, all the markets, if we trade them the way that we're doing this right here, the way that we're doing this, being one strategy, actually this is 2 different strategies. If we trade them the way that we're doing this right here, then on most days you're going to end up positive, okay? Especially if you focus on 1 or 2 markets, all right? Now, I think my last down day was the 15th. I think I had a down day. I was down about $25 per contract, I think. It wasn't a pretty down day. I say I was down $25 per contract, but that was because I made 19 ticks on gold, I think, but I was way down on one, and I was up pretty good on another one. Hang on, I'll tell you. Oh, my last down day was. Hang on, I'm trying to find it here. I want to say it was on. Oh, here it is. Hang on, sorry. Yeah, the 15th of November. It was the 15th of November. I was down 3 trades on the ES, so I lost 8 ticks 3 times on the ES. I was minus 24 ticks. We made it almost back to break even. We were up a couple on the NQ, and we were up 19 on, I think that's gold. Nope, up 19 on crude oil. So we almost made it all back. Almost, but not quite. We were actually 19 is 190 bucks plus 2 ticks is 200 bucks, and no, so we were off by like 100 bucks on that day. It looks like, unless we had some other trades. No, we didn't. Yep, November 15th, whatever day that was, Frank. I don't know if it was. You have it down Thursday the 15th. Okay. But on most days, you're gonna end up positive and making money. What we went through at the beginning when Dwayne and I were just going back and forth about the cumulative totals per contract over the last couple months. Again, that's I'm trading 8 different markets and answering questions from 100 people. You won't be doing that, so you should actually do better than I do. You should focus on what you're doing, learn what we're teaching you, and focus on what you're doing on 1 or 2 markets. And you can see right here, this is gold, and I made 11 ticks on gold today. On this one trade right here, I was up 17 ticks. If I wasn't doing something else, I probably would have been able to take all 17 ticks of that. I didn't take this trade, this trade, this trade, or this trade because I was probably doing something else on some other market. Actually, right in here, these 3 were in the break period, but I didn't take this trade, and I probably could have. I didn't take this one or this one. I didn't take that one or that one. I did take that one, but you can see right in here that my results would have been probably 5 or 6 times what they actually were. Okay, that's what we were trying to get to earlier before we started this. I mean, you can see right here, while I've been doing this, there was an opportunity right here where it pulled back down. Now in this case right here, you had your bullish cross, you pull back to the BBC, and you're up close with your bullish divergence down here on the slingshot. So your entry was right here, 1727.1. What do you expect that to do? You expect it to at least get right here. Right, at least right there. The next level above would be right over here, 28.5. And where is it right now? It's 29.1. So that, while I've been talking here, that's $200 a contract right there. Okay? And that one trade is $200 a contract. And all morning on all the markets that I traded, I had $270 a contract. So if that doesn't illustrate what I'm telling you right now, that you should do better, then I don't know what would. But okay, enough about that. Let me jump off the gold here, and I'll show you on the Russell how you should have done better. I think I took 2 trades on the Russell this morning. Okay, I had this trade right here. I think I was up 15 ticks. I was up 10 ticks total because I was up 5 ticks, and at one point I was up 10 or 11 ticks on this trade. When it was all the way up here, I was still in the trade, and that was when we heard news that Boehner was going to start talking. So I figured I was break even. I had my stop at break even on the thing, and I just let it go if he was going to start talking. I had my target way up at like 3 points above this. It ended up coming back out and stopping me out here at break even, unfortunately. But you can see in here all the places where I've drawn trend lines in here, where it pulled back to the BBC, where we had divergence. All these opportunities in here were places where if you were focused on this market, you would have made a lot more money than I did. I took this trade over here for 5 ticks. I took this one over here for a break even. And those were the trades that I took. All right. If I were more focused on the markets and just one market, if I was focused on just this market, right here is an opportunity. Right here I took this one. Right here's one on the downside. Over here is one on the upside. Here's one on the downside. There was nothing in here. Nothing there. There's one on the upside. There's another one on the upside. Then we get into the break, but here's one on the downside. Here's another one on the downside. Here's a small one on the upside. There's, in what I just showed you right there, there's probably 5 times what I made in the 2 hours this morning. And that's the Russell. Let's bring over the crude oil. All right, I'm up 1 tick on crude. Now the trade that I think I took 2 trades. One I took a break even, and one I took 1 tick. But look at the trades that I took right here. All right, I went short here, and once we got down here, I moved my stop to break even, and it took me out at break even. Now I said when I put the trade on that it should get down here to this level, and look what it did, right down there, 2 ticks or 1 tick beyond it. My next trade was over here, and when I took this trade, I said it should get to at least this level, but it should go farther than that. And look what it did. It got down to that level, and then it pulled back up. All right. That's where I took 1 tick this morning. But look at the opportunity in here. Once you get this bearish cross right here, you know you're looking on the short side. You get some nice divergence down here. You know whether you can take it right off the BBC or whether you have to wait for it to break a trend line. In this case right here, you had a little bit of blue, but you could probably just short it right here because there was a lot of momentum on the downside. Okay. That was it. You know, there's so much opportunity in here, and I know that, you know, of the folks that are out there listening right now, I know a bunch of you, a whole bunch of you, have taken the free trial with us already, and you know, you've seen the way that we've done things in the past, and you know, sometimes, depending on when you took the trial, you know, we may have been in a flat period, and we may have been trading less aggressively, you know, or more conservatively. So you didn't see us putting on a bunch of trades. You saw us waiting for a whole bunch of things to set up, and then, you know, if something set up, it might have been a, you know, it might have been, I don't know, it might have been a loss. And if we only have 1 or 2 set up, and one's a loss and one's a win, well, you break even on the day, and that's not all that impressive. But you know what? If you've taken the free trial and you haven't had it in a while, then you should go back out to the website, sign up for the free trial again. You know, if it's worth taking another look. You know, we've evolved with the markets, and we've brought a lot more forward, I think. Okay. Let's see. My max drawdown. My max risk on any trade. I put 8 ticks risk on every single trade that I take. Every single trade, I have an 8 tick stop. Okay. Now I'll reduce that stop as quickly as possible, and you know, a lot of times that puts me in small gains, but you know what? I'll take a small gain before an 8 tick stop anytime. That was the question. Well, the question was my max drawdown. My max drawdown over the year. I don't have that. No. How consistent are the profits? You know, we have over a year's worth of recaps out on the website. You can go look at them all and see. There's actually on the website at the bottom, and I'll show you. Yes, we do. We are exclusive to Daniel's Trading. Okay. Now we can talk about that in more detail. But what I wanted to show everybody is on the bottom of the website down here, there's a thing that says YouTube videos. If you click on that thing, it's going to bring up this. And right here you can scroll through, you know, the stuff that's out there on YouTube. All right. There's some videos out here that we've done that you've never seen before, I'm sure, unless you went to all of our meetings. Like this one right here, we did this afternoon. This was an afternoon session we did on the 6th of November, you know, a couple weeks ago, and we recorded the whole thing. We went through basic charting. We went through a bunch of information in here that we haven't done anywhere else. This is out there for everyone to go look at on the website if you wanted to. Okay, you just have to click on this little YouTube videos thing down here from the home page and go find the one you want to look at. This is Review Basic Charting 101 or something like that is the name of it, but the date on it is 11/6. Okay. We put all the stuff out there. Everything. We're as transparent as we can be. You know, I don't have all the latest recaps out there. They were all good. You know, as I said, the last down day was on the 15th, and I think we have all of our videos loaded up until November 15th. For some reason, the ones that I've done after the 15th have been really big in size, and yesterday YouTube wouldn't take them. They, just so you know, Dwayne. All right. I'm getting off track here a little bit, but I think I went through all the markets, didn't I? Everything but soybeans. And I want to just show you the soybeans really quick. The same thing works on soybeans, and I love the soybeans, the way that it works on soybeans, because they work really well. Let's see, the market opened up here at 10:30. Our first trade was right in here. I moved my stop up and took a little bit of profit on this once it moved up. All right, our next trade was a short trade. No, it was a long trade right in here. We went long here, and it took too long for it to move, so I took a break even on that. The next trade was a short trade here. We took some profit on that. There was an opportunity to short right there, another one right there. We did short over here. We took profit on that. And let's see, there was more opportunity since then, but we went into the break. Let me just draw a couple of trend lines on here for you. After you get that bearish cross, you could have shorted right there where it stands right now. It's approaching the BBC. You want to see it get up to that BBC. We have some bearish divergence developing right now as we speak. Here we go. There. That's what it is. Now we're at the BBC, so I would look for a down close. All right, just a down close right here, and I'd short that. Okay, simple as that. A down close on that bar. It'd be best if it closed down below this this trend line at the same time, but as long as we get down below that trend line eventually, I'd look for a down close and a move at least down here to 41.25. Okay, that's what I would do on the soybeans. Simple as that. All right. Dieter, you know what? I'm going to put my phone number in here, and you can call me, okay, because I got to wrap up all the recap here. But I'll put my phone number in here for you, and you can give me a call, and we can talk about this, okay? We can talk about all of it. All right, that's it. I'm gonna wrap it up. I've been going for a long time on this one. All right, again, reminded all the partners, there's a partners meeting tonight. Anyone who's on the free trial, you need to become a partner to get into that partners meeting. We have a bunch of things that we're going to cover in the partners meeting. Of course, everything that I just covered we'll cover in more detail. And that's it. Stopping the recording now.